Since 1987, we've helped investors navigate the markets using technical research focused on relative strength, supply and demand, and momentum. From sector rotation to asset class rankings, we highlight what drives performance. Nasdaq Dorsey Wright, helping you stay one step ahead. Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for Wednesday, July 15th. Happy mid-July, Miles.
Happy mid-July. How you doing? You were up in New York state of mind, right? You're getting around from a couple different travels. And...
Yeah, just trying to, I felt like I was trying to escape the heat, definitely escaped a little bit of the humidity. So Ian Saunders here, you got Miles Clark. I was out of town Monday, Tuesday, got back, I guess late, last night. It was definitely a little bit cooler, at least it felt like it, even though the temperature, I think, was actually a couple degrees cooler, but we got off the plane yesterday. I was like, cool, that humidity, just a couple days without it just really kind of smacks you in the face.
Yeah, well, I kind of went the opposite direction because, I was down and we did a whole world tour, it seems like.
It's been a while since we did a normal pod.
I know. Puerto Rico and then into New Orleans and Florida. So I pretty much went the opposite direction as you all. Different purposes of trip, of course, but
yeah,
but it was equally as fun. But yes, coming back, I was like, oh man, it's actually home field advantage. I was out on the golf course with a couple buddies and it was like 100 degrees. And I was like, this feels great out here because I was used to humidity and it being 110 outside.
Right.
So
yeah, it's a season to travel, that's for sure.
Yeah.
I'm sending out emails, and I think sending out like a group emails. I think a third of them are bounced back out of the office these days. So hope everyone's having a good summer, enjoying had a good 4th of July, I guess. Haven't talked to many people since then. But we've seen quite a bit of movement going on in the markets over the course of the past couple weeks. We was pretty strong into a strong second quarter, rocky start to Q3, to say the least. Is that fair?
Yeah, relatively mixed from the names that, you and I typically look at on the podcast here. Your S&P 500, the things that most people care about, up about 0.5% so far this year. Where that's coming from is interesting, right? But over the last week or so, crude popping 13% on some renewed fears of tensions in the Middle East. As I just mentioned, the S&P 500 up around 0.5%, the Nasdaq Composite up around 1%. This is before action on the 15th, and we're taking a bit of an exhale today. But again, kind of the core of the market, at least somewhat positive over the last 7 days towards the downside. Gold off around 2%, the Dow Jones, and then interestingly enough, the average S&P 500 stock, SPX EWI, off around 0.2%. So
wow.
A bit of a dispersion between your big names and your kind of average or your other 493, if you will, over the last week.
Yeah, I mean, it's interesting to see that kind of move, but not necessarily surprising. I mean, you saw such a solid run throughout Q2 from several areas, kind of the leaders of the market. We'll get into a little bit more of that. I mean, just from a broader perspective, before we dive into some of the individual movement, it's not that shocking to me to see such strong improvement over a short amount of time, right? And then you see some consolidations. Like, we won't throw the chart up necessarily yet, but you look at the default chart from many of the major indices, like the S&P, for example. I mean, you see big move up, and then you see kind of consolidation around the midpoint on its trading band. I mean, we'll see what kind of shakes out. We're seeing some interesting moves from like a sector perspective.
Yeah.
So leadership might change. But at least from broader domestic equity standpoint, we're not looking bad. We're just not on a 10% every 3-day run like we were for a little while.
Yeah. And listen, you and I have been doing this for how many years? I'm not sure how many podcasts, a lot of them, and they're all great. But I remember lots of conversations with you and I. It's like, markets can't go up every single day.
Yeah.
I'd see it a bit.
You don't want them to.
No.
You get more concerned. And then you start looking at your kind of turn of the century time frame, right?
Right. Exactly. But interestingly enough, before we dive into any of the more specific stuff, while we're still on the topic of performance, I do think it is interesting. You just look at your broad Spider Select funds, so far in Q3, XLE, XLF, they're your and XLC all up over 4%. They're by and far your leaders. XLI industrials and XLK, your technology, they are lagging behind so far in Q3. Those were our previous leaders. Now, I do want to reference that the laggardship, if you will, is not intense enough to go say these guys aren't leaders anymore. But it's at least interesting that over the first 2 weeks of the quarter, we're seeing a bit of a difference in what we saw throughout the first half of the year and so far in Q3.
Yeah, I mean, I think one of the things I know we're gonna maybe a little bit out of order with this, but one of the things that we were talking about there, if we're talking about laggers, might as well bring it up, is the RS spread index, right? And so this index, we'll bring it up on the screen for those following along on YouTube, is essentially a measure of how well momentum's doing. So it takes we take a bunch of names, 1,000 names. We separate them off into performance quintiles, essentially momentum quintiles. Quintile one being the top, kind of best trailing performance. The top quintile, top momentum names. The bottom quintile being the worst, right? The laggards. So how is your leaders doing versus how are your laggards doing? The spread that you see there is just leaders minus laggards, and then we get a reading over time. This reading was at highs. I wouldn't pay as much attention to necessarily the relative position of this chart over time.
With the
I think,
value.
right, I think it's more important which way is it moving? Is it moving up or is it moving down? And how quickly is it moving,
Right.
right? And so what we've seen recently is real sharp improvement, real sharp movement higher. You got a couple big column of X's in there from April into May, 10 X's in a row, and then you rattled off another 6 X's in a span of just a week. And kind of that ascent up to what's the 2450 level there on the chart, all of a sudden turned right back around, and in a span of another week and a half, fell all the way back down and gave a technical sell signal on the chart. Now, what that's telling you is not necessarily, hey, you need to sell momentum. That's not what that sell signal means. It's saying, hey, your laggards are bouncing, your
Right.
leaders are underperforming, right? And that's kind of what we've seen, at least across the market. Really, in looking at those sectors, like you said, technology, industrials, they're still the top rank area in our Dolly sector rankings, but we've seen deteriorating strength, certainly from technology,
Mhm.
over the course of just the past 2 weeks.
Oh, yeah. No, and I wanna mention this, right? Like, you say not to focus on the sell signals as much, and I certainly would
Well,
agree.
I'd say focus on it, but I wouldn't trade off them.
Well, right, no,
Yeah.
okay, good point of clarification. But at least over the course of the last 3 or 4 years, you'll notice we have obviously had, points of expansion, points of kind of contraction on this chart.
Mhm.
Each time we did get a sell signal, we didn't see follow through, knock on wood, I suppose
You
you would
jinxed it
say.
now. Well,
Um,
the last thing we did was 2022, a
right,
very
yeah,
different market
yeah, yeah, yeah.
environment, right? Different rate environment, different things going on in the marketplace, coming out of a different period, right? I think when you look at it, you can see from 2020 really into 2023 is really just kind of sideways movement
Right.
from this. It was tough, and what it's saying, it's tough to define trends in the marketplace when this reading is going back and forth, right? It's saying, hey, sometimes your leaders are leading, sometimes your laggards are bouncing. It just can't really figure itself out.
Right.
But since that 2023 period, right, since we got that big downdraft in 2023 and started to tick higher in March of 23, it's shown some more consistency. You can see that more clearly defined positive trend, at least on the default chart, which is saying, hey, by and large, it's been a better environment for momentum or trend following.
Well, that's just because growth and technology have been doing quite well. I do think it is important to emphasize, though, while growth has been leading for the better part of the last few years, this chart is sector agnostic, if you will. So, it will all that it's looking at is leaders versus laggards. Those leaders could be anybody, those laggards could be anybody. And I also think it's important to remind everybody here that momentum is a self-correcting factor, if you will. So, as
Great point.
and if you see over time, changes in leader and laggardship, the baskets will obviously change, right? And so, all we're trying to do is capture those trends over time. It doesn't really matter if it's technology or if it's financials or whatever it is.
Yeah, we don't care what it is.
Exactly. It's just trying to measure that difference. And we want that difference to be high so that way we can hold on to those winners and avoid those losers. And that magnitude can be as intense as possible.
Yeah, well said. Well said. I mean, when we take a look at that chart, right, you see it moving lower. That means the laggards have been bouncing. One area when you're looking at what we can get at technology maybe in a sec, but one area that's certainly bounced recently is financials. We've seen financials tick a little bit higher in the Dolly rankings. They picked up a few signals. I think our Dolly sector rankings have actually seen financials move from, what was it here, seventh up to the fourth position
Mhm.
over the course of the past couple months. So it was seventh in May. Now it's up to fourth, actually moved to fourth in June. And it's continued to kind of tick slowly up from an RS signal perspective. We're not seeing the massive improvement that we might have seen, well, at least energy's seen massive deterioration, technology's seen notable deterioration, financials isn't seeing massive improvement, but
Right.
it's moving steadily higher, right?
Right. Well, and a lot of that, of course, too, it gets into our next topic, would be driven by some of the earnings, that we've seen. This week got earnings started up in earnings in earnest. It got earnings started up. You saw the likes of, J.P. Morgan, Goldman, Bank of America, Wells Fargo, really the all the big blue bloods there. And most of their results, I mean, even Citi, which dropped around 5 or 6% after their results came out, they were still beating, right? It was just a kind of a recognition of investment, some of the classifications that markets didn't like. Regardless, so I mean, it was a passing of all colors for the likes of GE. I was about to say Goldman, which was up 9%. J.P. Morgan saw revenue, net income expansion in virtually every segment of,
Yep.
of their business. So a lot of this stuff coming from a lot of the big banks, less so from other areas, right? Like you look at XLF versus just pure banks, and the difference
I'll
that
bring that chart up here now.
yes, the difference for XLF being it's heavily weighted towards some of your payment processors like
Mm.
Mastercard, Visa, not a payment processor, but Berkshire's in there as well, which is not
Yeah,
necessarily a
Berkshire 11, 12% for those following along, but you can bring up the holdings on the page at almost 12% Berkshire.
right.
I did not realize that.
Yeah, so it's a big
Visa up
weighting.
there at 7.5, MasterCard. Yeah, that's
You're like
not a lot of banks.
30%. Yes, exactly. You're like, so your non-banks banks, or your non-bank financials are doing a little bit worse, versus if you and Ian, you don't have to pull it up, but I know it. Like your DWA Bank, which is a basket of a Dorsey Wright basket of a whole bunch of banks,
Mhm,
that's up like 20% this year, right?
mhm.
So you see the difference between XLF up 2 and that basket up 20, right? It's really where you're seeing that focused strength from your banks. I
Yeah,
just
two
ran.
and a half, 2.5.
Okay, we'll
So,
give it
yeah,
what it's
there you
worth.
go.
Yeah,
But no, you see, I think with the movement that we're seeing, right? And one thing I think when you look at the earnings yesterday, I was following along when I was trying to keep up with market action while out of town at a conference. But I think JP Morgan, after they reported, was actually down over 1%
right.
leading into market action. And then obviously as markets opened, things sorted itself out and it actually ended up a little bit higher on the
Yep.
day. But I think it was interesting that the initial reaction to the earnings was selling pressure.
Yeah, I'll tell you this. I didn't get the chance to dive into this a little bit more, but besides maybe just our conversation before this, but also in there was a lot of, and it wasn't just JP Morgan, but it was a lot of quoted cuts, job cuts because of
Mm,
AI, right? And I think sometimes you hear job cuts. I've still struggled to figure out whether the markets think job cuts are good or bad sometimes. Sometimes you get mixed reaction,
so
but
yeah, I think it depends on the company.
that might
It
have been a
depends, the
little bit of
classic,
it,
right?
right? But anyways, that's neither here nor there. But from a technical perspective, a lot of these guys still look very good. Even XLF, which is underperforming, is still at least technically defendable, right?
Well, I mean, it's at matching all-time highs. We saw it tick back up earlier this month on the 6th, I believe. It reached up to that 56 chart level. It is at the top of the trading band, but it's matching all-time highs that we reached in January of this year. 3.98 fund score, not quite what we consider to be favorable, but certainly improving. I mean,
Right.
it's up over a score point from its low. Clear positive trend. You got positive weekly, positive monthly momentum. Getting into overbought territory, which is not a great sign, but that you would expect that when you see an improving relative strength area on
Right.
this, right? If you start to see RS buy signals, then that's saying, hey, we have to see improvement. We have to see these things
Right.
move higher in order for that to happen. So I'm not surprised to see it. It's not heavily overbought, not nearly as heavily overbought as we saw from a lot of the technology or semiconductor stuff during that run,
Right.
right?
Well, and talking about an area, and maybe unless you've got another thought on financials, talk about an area that has.
Well, before we go into
Yeah.
that, I will say on the default chart for XLF, big drop to support. We do not have much near-term support.
Yeah.
So we're looking at that chart there at 56. For those that are not following along YouTube charts, at a double top formation at 56. We need to tick to 57 to get another buy signal. Let's see what happens actually when we change up. You know how I like to change up the chart scale a little bit. Let's just normalize it to like a 1 point. Yeah, you can kind of see that down there. More support down to that 48 point. I mean, really, we got a all-time highs in January, turn right back around February into March, and move straight down from 56 all the way down to 48, and then turn right back around and head higher. We don't have recognizable support, I guess, until 48 on the as you would classically look at on the chart. I will say you'll probably see some semblance of old support around the midpoint on a trading band around 52, 53, right?
That's where I was about to go. I was like, Ian, don't you know me well enough? I'm going to say the middle of the trading
Exactly, yeah,
band,
I
the
cut you
50-day
off before you
band.
could say it. But no, I mean, yeah, middle of the trading band and prior resistance there. I would expect to see, I mean, if we did see a turnaround in prices, right? Even if we got a breakout and a reversal down, that might be a natural place to see some consolidation.
Yeah.
But I mean, it's seen a lot of improvement, so I think that'll be an interesting area to keep an eye out there. But now, I mean, on the other side of the coin, to your point, area that's not seeing improvement, well, did see improvement. Now it's seen its fair share of consolidation as technology, right?
Oh, yes. Yeah, yeah, yeah. And, when we talk specifically too, a lot of going back to your point about the RS spread from earlier, right? A lot of that RS spread basket was semis that are in the top quartile or quintile, excuse me, or even top decile, right? Your highest performing names are semis. Your lower basket were a lot of software options.
Mm-hmm.
And now, just speaking about, stocks, I think that's probably the one that you've got
Yeah,
pulled
that's what
up.
I'm pulled up.
You've seen a lot of consolidation here. First time that we're on the verge of posting 3 consecutive sell signals since, what is that, 2025 or
Yeah,
early 2025.
but you saw a lot. I mean, this stock I mean, down 3%, or sorry, fund down 3% today. So year to date performance there is still up 88% year to date,
Right. Yeah.
and we're talking about consolidation.
Yeah, yeah.
I mean, that
We're talking
like
about practice. We're not
right, exactly, exactly.
gonna look
Yeah,
that one up if you got a minute.
Sox skipped practice, went straight to the game for a couple months there, and just went on a run. But I mean, to your point, we are seeing that consolidation. I think one of the things I like to do is change it up to the percent chart. You're gonna
Right.
keep doing what I know, right? But when you're looking at this, you can see a little more clear stair step higher because it normalizes a lot of that historical price action. We saw that kind of classic shakeout pattern in May, continued higher, got up to highs around the 650 point, and then it turned around. Even on this 2% chart, we're on the verge of 3 consecutive sell signals. So that just furthers the point that you made there, that it's showing that move. I think that real clear support level we can see here at 543. If we get down in the low 530s, below 532, that's kind of a more concerning point, I would say, on this 2% chart. But we are, at the end of the day, we saw a real sharp improvement. It deviated pretty notably above what we would consider to be normal improvement, right?
Right.
It gapped higher a couple times over the course of the past 18 months, and now is just below the midpoint on its trading band.
You know what? I'm actually gonna call back, because I'm looking at that 2% chart too. This is off the cusp here. How different do you think that this current technical setup is? Look back at that early 2026 setup, right, where we were coming back, posted a handful of sell signals there. We're close to posting, we're violating that old support. This kind of looks similar to me, where we
Yeah.
got lower highs too. Now, of course, I'm not projecting that we double from here. But it looks somewhat similar to me.
Yeah, no, I would definitely agree. I mean, we're talking about, again, 88% year to date.
Yeah.
I mean, that's insane. I mean, just to think about that and have that run that we'd seen, and I think we've seen new areas come into the fold there. I mean, we talked about Mac 7 not showing as much magnitude of improvement as they had before, but you still have names like Apple continuing to march on higher, right?
Right.
But the other areas, new entrants to that improvement conversation. Yeah, I mean, it's just kind of consolidation here. We do have notable support. If we are going to see, at the end of the day, this is kind of what you want. You want steady. If we see this sharp improvement, we had a lot of models pick up exposure to semiconductors. We had a lot of models continue to add that, and we started to see some of those begin to unwind some of those positions recently, which is ultimately what you want. Now, a lot of times you might not want that on a short term time horizon. Ideally, you have runs persist for longer, but to your point earlier on momentum, the important thing is that you and I are not making that decision. We're not saying, hey, we're going to hang around in this. Hey, let's make it last a year, right? If the trends change, that momentum is going to change,
Right.
and this indicators or whatnot on the site will kind of pick up on that and tell you what to do moving forward.
I'd be remiss, or I think we would be remiss if we didn't at least touch on the fact that we have returned to a sell signal against the equal weighted index there.
Hmm.
Again, I don't want that to overlook, the consolidation or the magnitude of upside participation and how the
No,
area
but
is
that's
still
an important
strong.
point. That's exactly what I
Yeah.
was saying. That if we I mean, look at that. It's that Stocks versus SPX EWI on a 3.25% scale. I mean, you had 33 X's in a row. Every one of those X's is 3.25% of outperformance from stocks relative to the equal weight S&P.
Yeah.
That is off the like literally almost off the charts, right?
Right.
And the fact we turnaround is notable, right? So
Yeah.
we are seeing consolidation. These names are up a lot. I was saying that to say that I don't know if I would not pay attention to further signals and be like, I'm gonna,
Right.
it's semis, it's different. Well, it might be, it might not be.
Right.
That's why we have the charts and the indicators
Right.
to keep an eye on, right? And we can kind of keep technology still the top ranked sector right now. Semiconductors led a lot of the improvement. But if we see further deterioration, whereas other areas pick up the pace, then that's going to be something that we need to keep an eye on, I guess, as we move through the rest of the second half of the year.
Well, talking about other areas picking up some of the pace, um, healthcare, but it hasn't been your grandfather's healthcare names necessarily that are really doing it. You've got a lot of biotech that's doing relatively well. The likes of your XBI is just kind of a large conglomerate or large
Yeah,
fund,
yeah,
I
yeah, pulling it
suppose.
up now.
Pulling it up. But you've seen that big stem. I mean, only second. What is that? It's 18 X's, second to this big stem that we saw back in the late 2025. That was 28 X's.
Mhm.
But we've gotten a bit of a pullback out of heavily overbought territory. So I think this is a very interesting part of the market to watch. I'm sure you'll talk about Dolly in just a moment, but that sector's moved up within our rankings. It's now pulling back. This is, at least to me, one that I'm setting an alert on, right? Using the
So
bell
what alert are
icon.
you setting?
I would personally be setting it for a reversal back higher.
Back in axis?
Yeah.
And then that give you near-term support at that 154 or wherever it went
Yeah.
from level. I mean, we're still, yeah, like to your point, is 68% overbought is not what we can say. It's right on the cusp. It will kind of toward the top of the trading band, but
Yeah.
not overbought. I mean, you talk about consolidation. That's pretty clear consolidation there throughout the beginning of this year. And yeah, I would totally agree with you there. I mean, 5.89 fund score, pretty darn near perfect. And another point, we won't necessarily dive into this, but I think a lot of the improvement you've seen from some of the biotech names has been from improvements in technology. It's been from these AI names that you're actually starting to see that come to the aid of some of these biotech companies, right? They're
Right.
starting to find some new ways to go about testing, new developments, hopefully some new vaccines, cures, whatever it is biotech does, right? But it's starting to actually come to fruition a little bit there. And that's at the end of the day, kind of what you want to see from a revolutionary shift like AI, right? You can't have semiconductors just be the only winner. It's if it's going to be as impressive as everyone says it is, I mean, other areas are going to pick up the pace, and biotechs make sense. I mean, we've also seen a lot of improvement from small caps recently.
Right.
Biotechs, a lot of those
Oh, yeah. A
biotech
lot of this.
companies are in the
Yeah.
small cap space, and I think that's holding up a lot. Even in the momentum unwind over the past couple of weeks, we've seen small caps hold up better than large caps. And a lot of that's probably due to some of this biotech in there. Now, obviously, every name in the Russell 2000 is not a biotech stock.
Right.
So, but I mean, the magnitude of the improvement is definitely still there. We're seeing that kind of, to your point, in Dolly, it's added signals along with financials. It's moved up in the rankings. Definitely be an interesting area to see if we can get that reversal higher there for you.
Yeah, and just as I opened it up with, it's not your traditional healthcare names that are doing relatively well. Those guys are still doing fine. You've got, if you look at our asset class group scores page, which measures 134 different groups up against each other. One is best, 134 is worst. Biotech is third, only ranking behind Japan and SPX or the S&P 500
Hmm.
index funds group. Healthcare is in 17th. So there is a bit of a
UNH up
spread.
28% year to date.
All right, maybe I lied. I'm not sure. Um, but you've got, healthcare is there in the 17th position. So it's still in our blue sky zone with an average score of 4.3, but it is still around a point away from biotech, which is in that third position.
Right.
So that is where the strength is, but that's certainly, I'll take it back. Healthcare is not bad.
Well, yeah, it's improving. I mean,
Yeah,
that's
yeah, yeah,
and
yeah.
if we see technology continue to decline, we see areas like healthcare and financials continue to improve. I mean, ultimately, you want that kind of healthy movement in the market to
Healthy.
take place, right? Healthy with healthcare. Pun not intended there. An area though of market action, and maybe this is the area we can wrap on. Obviously, we've seen a lot of back and forth action from energy stocks on a sector perspective, and that's been driven by the back and forth action we've seen in crude oil, right? We'll bring up this chart as our kind of final chart of the day, as it were, chart of the week, I guess. I mean, this default chart is almost hurts my eyes to look at. You can see though that really clear consolidation triangle back pattern forming, not with signals, but this time with trends, right around the mid 90s there though. I
Right.
mean, if you just kind of squint your eyes a little bit and look at it, you can see it kind of pointing directly at
There's
90.
a pattern in there, I
There's a
promise.
pattern in there, yeah. But you can see it pointing almost directly at 95,
Yep.
right? And then we kind of break 4 consecutive sell signals here, moving into oversold, washed out territory, and now we're bouncing back toward the middle of its trading band. We haven't seen energy pick up any more signals in Dolly with this improvement of the past couple days. It hasn't bounced up much. It deteriorated pretty notably. I mean, to me, it looks like a still a longer term area of weakness, but who knows? I mean, this has been changing on every truth post or missile launched or whatever it
Right.
is that's going on these days, that we could continue to see some pretty sharp action. I would expect volatility if
Right.
I'm going to expect anything, it's probably volatility moving forward, right?
For sure. Yeah, I certainly don't disagree with you. I'm going to offer my 2 cents on this chart. That being,
You want the default chart or you want
I'm
the
on the default
okay.
chart here. The most important level to me was this $80 mark per barrel, I suppose. And the reason why that's important, one, is not only is at the bottom of this level of support, but really that was, where we were bottoming out at when things looked like they were dissipating, right? So when it looked like we were getting kind of conflict de-escalation, things fell down to around 80,
Well,
right?
it also, if you go back in 2024, 2025, that's a level that we had some difficulty getting back above since August of 2024. We saw prices move lower. We saw each time they begin to move higher, they could not hang around
Right.
above 80. And after 2024, they didn't, after January 25, they didn't go back above 80 until March of this year.
Right. Took the words right out of my mouth.
Sorry.
No, it's a good, I was going exactly there, right? So it seems like that 80 point is important, just kind of like as a maybe as a, I don't know, transparency for what the markets are expecting, right? If we're above 80, maybe we're anticipating at that, maybe further conflict escalation versus if we're below 80, maybe it kind of markets are pricing in a little bit more of a, conflict
Yeah, I
resolution.
like to change the chart up there. If you go back to that 2% trend chart,
All right.
you can see basically exactly what you're saying, over time. That every time it moved lower in this recent decline up until June, it kind of didn't break far below that 80 point.
Right.
Prior to that, it didn't break above it, right? So now that we have moved beneath it, solidly beneath it, all the way down into the upper 60s, and we're right back hovering right around that point, right? On this chart, you're still looking at 4 consecutive sell signals. Still the same catch rate thing we talked about before, bouncing from oversold territory back toward the middle of its trading band. We're closer on this chart to reversing down into O's than we are into adding another X, though, I think was notable with that movement yesterday. So we're up 1.5% at the time of this recording on Wednesday around 2 p.m. If we do reverse back down lower, I mean, that would be notable. We need to go down another, 3.5% ish.
Yep.
Um, versus we need some further improvement to get back toward the middle of the trading band. We've seen crude swing more than a few percent a day.
Yeah. That's like a
So that,
20-minute action.
yeah,
For sure.
that could happen during the time it takes to publish this podcast.
Yeah.
But yeah, to your point, that 80 level, maybe another area to set a price alert,
Maybe.
right?
Who knows though? I mean,
Maybe I would do it chart level rather than intraday level because we're just bouncing
right.
right around that point, kind of moving forward. So yeah,
Well,
any
earnings
other
are gonna
charts?
no, no, no. Earnings are gonna keep going. We've got the likes of Netflix tomorrow, and well, I guess by
When
the
do
time
Apple and Microsoft's reports? Is that next week?
the first big one is Google, and they're next Wednesday.
Got it.
I don't
Next
know
Wednesday.
what.
Google, Meta, Apple, Microsoft, they all
Yeah,
tend to
I'm
move
sure
in the
there's some
same
more to
week
that.
span, and then
Yeah,
Nvidia does its own thing off in the woods by itself at the end of the quarter.
something like that.
Yeah.
We appreciate y'all's time and everything like that. I hope everyone has a wonderful and safe week, and we'll see you again next time.
Cool. Thank you.